All right. Good morning, good evening, good day, wherever you may be. Chinese investors feel pinched after a string of corporate bond defaults brought a bullish November to a bearish close. Along with the increase of COVID-19 cases in Hong Kong, Trump's investment ban for U.S. investors has investors on edge. The House might vote Wednesday on the bill that requires U.S.-listed Chinese companies to provide their audit books to the PCAOB or face delisting in 2 or 3 years. The global standard is for the PCAOB to be allowed to view the auditor's notes. It's simple, really. Don't know what the problem is. The futures declined on report that the Trump administration is weighing blacklisting Chinese leading chip maker SMIC as well as national offshore oil and gas producers in CNOOC, escalating tension with China. The S&P 500 and Nasdaq have climbed 11.3% and 11.9% respectively in November, both on track to post the biggest monthly advance since April. Stocks fall and still have the best month since April. Isn't that glorious there? And y'all said it was going to crash. The S&P 500 fell 0.5%. The benchmark index still climbed 10.8% for November. Investors are hoping that the coronavirus vaccine will get us closer to normal next year as the vaccine is distributed. November 30th. Australian shares extended losses for a third straight session on Monday as deepening tensions with its largest trading partner, China, following a move by Beijing to impose anti-dumping tariffs on Australian wine imports, rallying investors. They put tariffs on Australia. Really on wine. The tensions right there. The country responded defiantly on Friday to China imposing temporary anti-dumping measures, saying the seriously concerning development looks to be about diplomatic grievances and not any action by winemakers. See, told you something else. Nikola failing to land an equity investment firm, General Motors and Kandai Technologies, being slammed with a negative report from Hindenburg Research. Last week, the report probed into Evergrande Auto by the National Development Reform Commission. But Nikola and GM have come to a different contract agreement for lesser amounts. I don't think the truck's going to be made. Some losers for the day include General Green Power Motors, ticker GP, 8.4%. AVRO, negative 11.1%. XPEV, negative 9.9%. Li Auto, LI, negative 8.3%. Lordstown Motors, RIDE, negative 7.1%. Hyliion Holdings, HY, negative 16.0%. Westport Fuel System, WPRT, 4.8% negative. Workhorse Group, WKHS, negative 4.6%. And Fisker, FSR, negative 5.2%. In case you want to keep up with it. Some of the most shortened stocks by hedge funds have been the biggest winners this year. Hedge fund biggest short position, Tesla, has a negative 1.7% overall weight among funds, according to calculations. The electric car maker has soared nearly 50% this month alone, bringing its 2020 metric rise to almost 600%. Chinese-based electric vehicle maker NIO has also been a popular short bet among hedge funds. The stock has rose even more than Tesla, opening a whopping 1,173% this year. Another shortened position is Trade Desk, has doubled in 2020. Tesla has been given approval to sell its Model Y crossover in China, giving another boost to a stock already juiced by its recent inclusion in the S&P 500. That NIO is going to be right behind them. This would be a Tesla's ticker, TSLA, second made in China vehicle available sales in the U.S. in the country, not in the U.S. Not thinking about their stock market there in the U.S. This would be Tesla's ticker TSLA, second made in China. Vehicle available for sale in the country, China. The vehicle also qualifies for sales tax exemption. Zero emission vehicles often have purchase incentive attached to them in China. So he's going to keep growing in China. He's got to go down. NIO is going to be right behind him. So stay tuned for no more news and comment.